Good morning, everyone. Welcome to this morning's webinar. My name's Marcus Bourne, and I am your host for this morning. We're in good company. Joined with me are my colleagues and associates, Brad Law, who's the country manager for RiskLogic New Zealand. Brad's got over 20 years experience in assisting clients prepare for and respond to crisis events. And along with Brad, we've also got Bruce Wittick, who's our regional manager for Aon New Zealand. Bruce also has over 20 years in the insurance industry, also assisting clients prepare for the worst and disasters accordingly. Good morning, gentlemen.
Morning, Marcus.
Morning, Marcus.
Guys, this morning's webinar, as you can see there, is about insurance and business continuity life cycle. But before we get started, just a little bit of information about today's agenda and the format. Essentially, we will be running through a short presentation, which is really going to cover off the current state of the insurance market. We'll be talking through what business interruption insurance looks like, how it works, and why it's so important. We'll be looking at the fundamentals of what business continuity is and the business continuity life cycle. And we'll also be running through some tips in terms of getting organisations prepared to go through their insurance renewal in 2019, really to get optimal outcomes. Whilst we're going through this, you will have the opportunity to type in questions into the panel typically at the bottom or the side of your screen. If you can't see the panel with the Q&A tab, just move your mouse around, it will show up. So please do, as we're going through the presentation, type in the questions you have. We've left about 10 minutes at the end of this webinar where we will address as many questions as we can possibly get through. If we don't get to answer any at the end of the session, we'll come back to you directly. Without further ado, let's get into it. Bruce, a lot going on out there at the moment. Some interesting noises coming from the insurance market. We even see as late as this morning, IAG not offering contents insurance to new customers coming through in Wellington. We're hearing stories of major premium increases and a lot of organisations finding it either very difficult to find insurance this year or paying very much for it. So perhaps you can just take us through what is going on out there, and more importantly, what should people be doing in terms of preparing for the 2019 insurance renewal?
Absolutely. Thanks, Marcus. Look, the insurance market here in New Zealand continues to go in cycles between a hard and a soft market. We're currently in what we call a hard market, where insurers really take a close look at their portfolio of business that they're underwriting. It's driven by the pressure they get from reinsurers and the capacity that they're providing the local market here. And on the back of that, insurers will be increasing premium, reducing their exposures, tightening their terms and conditions, and really having a close look at their portfolio and their overall exposure. That's opposed to a soft market where premiums are reduced. There's a high level of competition within the insurers, again, driven by additional capacity that's coming in from overseas reinsurers. What the reinsurers are looking at when they're providing that capacity is what the exposure is in geographies and industry types, and certainly losses, not only in the local market but globally. And at the moment, we're currently really being affected by some large-scale events internationally. We've had hurricanes Harvey, Irma, Maria, the Californian and Australian fires. These are massive losses to the insurance industry that the reinsurers are taking the hit on, and on the back of that, they reduce their capacity in areas that have been affected and industries that have been affected. Another industry type that certainly here in New Zealand, and probably wider than just New Zealand, is seeing some effect on is the EPS market. EPS, expanded polystyrene sandwich panelling, predominantly used in food manufacturing and cool store risks. Huge losses globally. One in this part of the world last year was the Thomas Food Fire in Australia, over $400 million worth of losses. Those type of losses really have a wide spanning effect on the market, not just the site that was initially affected. And here in New Zealand, we need to understand that a lot of our insurers are actually Australian owned. So what happens over in Australia and beyond does have a direct impact here in New Zealand. So that's really what the property market is looking like at the moment. Premiums are going up, terms and conditions are tightening, and on the back of that, it's over to us as brokers to work with our clients to really understand their risk, their exposure, and put that business in the best possible light when we're presenting them to an insurer to consider
Bruce, how heavy is the scrutinisation of risk management strategies this year as opposed to previous years that you've seen?
Look, it's continuing to increase that concentration on risk management, particularly in the higher risk geographies and industry types. So, a nice, clean manufacturing risk. Yes, risk management is important, but the insurers are going to take a harder and closer look at something that's posing a higher risk. So certainly EPS here in New Zealand, depending on what crest is owned within New Zealand for natural disaster, they'll be looking at the NBS of buildings, the actual location, what risk management they're doing and improving with the building owner, what the building owner is doing to improve the risk, to reduce that overall exposure back to the insurer. So risk management is very important, and it's important for the business to work close with their broker so the broker can understand what risk management processes are in place so they can actually take that to the insurer market and, as I say, put the business in the best possible light, because at the end of the day, we're all competing for the same capacity that's being put out by insurers. So we as a broker need to put our client's business in the best possible light so we're getting the capacity rather than another business.
So long gone are the days of tucking that risk engineering report in the bottom drawer and hoping for the best?
Absolutely. Those sort of reports are vital these days. Absolutely.
Fair enough. From my time at Aon, just looking at business interruption insurance, I mean, it always came across as a really complex line of insurance. Typically, the larger end of the scale when a loss happens would always come from the business interruption side. And I guess getting those numbers right for business interruption in particular almost felt like a dark art, just given the complexity of the insurance line. Perhaps you can just give us a 101. What is business interruption insurance and why is it so important?
Absolutely. Look, business interruption works hand in hand with your material damage policy. So your material damage is covering your bricks and mortars of your business. So in the event of a major loss, your MD, material damage policy, is going to respond to rebuild the building, for example. But during that rebuild period, the business isn't operating. So the income that the business was generating is no longer generating. And that's a financial loss to the business that can be covered under a business interruption policy. So it is a really key component in the recovery of any business after a loss. But it is very important that that business interruption policy is structured correctly, adequacy of sums insured are correct, and the structure of the policy, so is it gross profit we're insuring? Is it a combination of that or additional increased costs of working? We need some good claim preparation costs. We need to understand what elements are part of that gross profit sum insured. So close attention needs to be paid when setting the BI policy up as well as setting your sums insured. And that's where a forensic risk accountant can play a vital role in that picture. It's important to get it right before the loss. Last time you want to work out that you haven't got the right sum insured or right cover is after the loss and someone's left carrying the baby. So really important to structure that policy correctly and have the right indemnity period in place. So that's the period that the policy is going to pay post-loss. So traditionally here in New Zealand, a lot of smaller, medium-sized businesses have carried a 12-month indemnity period, and we would challenge businesses to have a close look at that because really in the event of a major loss, 12 months is simply not long enough to complete the rebuild as well as go and get those clients that you potentially have lost during your downturn. So you need to be thinking it's not the policy just to pay for the period while the rebuild is taking place. The business financial position it would have been in had the loss not occurred. So if you lost a load of clientele during that downtime, you need to go and get them back one way or another, and that BI indemnity period needs to be long enough to cover that period.
And important to note that it doesn't cover everything. It has its limitations, its scope, its focus, and I guess its own triggers.
Absolutely. The predominant trigger for a BI policy is an insured loss under the material damage policy. So if we have had no loss to our bricks and mortar that's insured under the material damage policy, you're not going to have a BI response.
Yeah.
There are some technical sublimits and extensions that you can buy that can buy in an element of cover in those events, but if we look at the key component, it needs to be an MD loss, material damage loss, to trigger the business interruption policy.
Yeah, I guess, Brad, this is where business continuity seems to kick in. I mean, we've always looked at business continuity planning as that risk mitigation tool for your business interruption and I guess the period that you've been disrupted. what range of scenarios we think about business continuity, keeping in mind that, not everyone on the line today is a pro in business continuity. What kind of range of scenarios are we talking about when we start talking to our clients about getting a BCP in place? What would that cover?
Look, it does vary on the business. A lot of threats are common across most businesses, but really important to go through that analysis phase. And denial of access would be pretty key to most organisations. Quite interestingly, today or this week in Christchurch, we've seen a bit of a breakout of measles, which is causing quite a bit of issues for organisations. And the interesting thing around that is a lot of the schools are now banning kids actually turning up to school if they've not been vaccinated. Now, you may have a really good pandemic plan at your organisation, but if all of a sudden half of your staff needs to leave because the kids are getting sent home, it could be a real issue. So it's really about looking at those variety of things that can stop your organisation functioning, and sometimes it's completely out of your control because the kids are going home, someone needs to look after them.
And to that point, that certainly wouldn't be triggering a BI policy, would it?
No, that's right. Again, going back to that point, has there been a material damage loss? No, there hasn't been. So traditionally the BI policy won't trigger.
Yeah. Brad, we've got more recently in particular, as we talk through, we're going through a hardening cycle. We've come across a lot of clients now that are asking around getting BCPs in place, and more commonly, this seems to be driven by the underwriters requesting evidence of these BCPs. To some examples I've seen in the food and beverage industry where they can't attain terms without them. For, I guess, the audience, as I mentioned, pros in BCM, what is business continuity to start with, and what does that life cycle look like in terms of going from zero to good practice?
Absolutely. Look, I think the first thing is saying that business continuity insurance should not be working in isolation. We've seen that for a while now, and this is where we're keen to work with the likes of Aon and get brokers involved in this business continuity life cycle, if you like. We would follow a process very similar to what we've got on the screen there, a 4-step process around analysis, planning, validation, and maintenance. So just dive into those with a bit more detail. In that analysis phase, it's really about identifying those critical business functions and importantly, how quickly they would need to be restored if you have any type of outage that's going to stop the delivery of those. Key outcomes from that analysis phase then is going to be as I said, identifying these critical business functions, but also the interdependencies outside of that. You may do some risk engineering in that point, and that's where I think the brokers can provide some really good input there. So get them involved in this life cycle as early as possible. They're going to provide you with some really good feedback. From the analysis phase then, this then will allow you then to go in and start creating your plans. So this is about building, action-oriented plans that can be used very effectively if you have an outage that you weren't expecting to come along, it stopped your business operating for whatever reason. Having a plan there to provide you with some instruction, high-level checklist to get yourselves operating. And again, when you're planning those disruption scenarios and maybe loss of building type event, again, having the broker there to possibly say, look, if this happens, then you're definitely not going to be covered for insurance. You definitely need to be able to relocate to another premises. Again, is going to be very useful. It's all down to cost. Putting those things in place can be pretty expensive. From there, then we go to the third phase, which is our validation. So, really believe this is a key phase here, and the outcomes from this then is obviously training those response teams that you've identified in the plans, and also putting through a scenario exercise. Your plans are effectively draft until you can actually put them through a scenario exercise and actually test the teams, test the plans to make sure they're going to work for you. And again, really encourage you to get your brokers involved in these scenarios, particularly if it's an event that would trigger an insurance claim. They can be there on hand to give you immediate feedback of what that might look like and whether something's actually insurable or covered and how long it's going to take for that payout. And then the last piece then is the maintenance part. So that's really about this continuous improvement policy, continuous life cycle, making sure that your threats, if they may have changed, you need to review your whole plan and your analysis. And again, the broker involvement there is critical just to close that loop and have some really good outcomes about what this program is going to look for you in the new year. But it's really important to, as I say, have that continuous improvement. This is not a one-off exercise, just like your insurance renewal is not a one-off exercise. It comes around every year, and it's important to have all this stuff in place to put yourself in the best possible chance of recovery.
Oh, cool. Okay, so let's assume we've gone through that type of process. Bruce, preparing for insurance renewal, pretty critical in a hardening life cycle. We know that insurers are very much pushing the point on business continuity to protect that business interruption exposure. What do you think clients should be thinking about in the lead up to the renewal this year to get the best possible outcomes?
It's all about preparation and information. And as I was saying earlier, it's putting the business owner's business in the best possible light when we're presenting to an insurer. So risk engineering reports. So that's real in-depth data around the physical asset that is being insured. Having a forensic accountant work with the accounting team of the business to build the business interruption policy correctly, to understand how the business will react in the event a major event, and how much of a reliance has the business got on the insurance in order to recover. So, Brad made the point around the business continuity being part of the recovery process. So is business interruption. It's not the be-all and end-all. It is part of the process, and there'll be other aspects that the business needs to concentrate on, i.e. business continuity, to understand how it is actually going to get back on its feet in the event of loss. So it is all about paying attention to detail, understanding your risk, understanding how your business is going to respond after an event, and providing true data and good quality information to an insurer.
Oh, perfect. And Brad, I guess looking at it from your lens, what would you suggest being, a practitioner of business continuity in working with Aon and brokers in terms of getting ready for the cycle?
I think the key thing for me is obviously a lot of work goes into creating these plans, but they have to be validated. It's not a paper exercise. And again, having that realistic involvement from brokers in those exercises, it's so important from my point of view. It really brings in that realism, because that's the sort of stuff you want to know now and not in the middle of a real crisis event.
Yeah, absolutely. Bruce, would you also support that getting involved as a broker to help articulate the risk and probably more importantly the response strategy, but getting involved in those scenario tests, is that something that you'd support from a broker's perspective?
Oh, absolutely. Absolutely. The more involvement, the more knowledge that we as a broker have of our client's business and their response strategies just puts us all in a better position to actually step up to the plate when the event has occurred and provide that response that the business is looking for.
Yeah, that's perfect. Excellent. Well, that concludes, I guess, the formal presentation part of the webinar. We've left around 10 minutes for Q&A. So if you have any questions that are coming through, please do type them into the Q&A panel. As I mentioned, if you can't see the panel on your screen, just wave the mouse until it shows up. Hit Q&A, type in your questions. We have had a few come through during the session, which is great. First one here, this is probably a little bit more focused towards you, Brad. What's recommended we start with? Is it business continuity as a crisis management?
Well, that's a really good question. It does depend on the size of the organisation, whether you would have a standalone crisis management plan. What we would recommend is making sure that you can actually recover over 3 core areas, so operational, tactical and strategic. So again, depending on the size of your organisation, you may have plans for each of those different areas. But if you're small enough, you could possibly have a combined strategic and tactical plan, so that you can minimise the amount of plans you've got in place, but still cover those crisis areas. So things like reputational impact, anything that's got the media involved, you definitely need your crisis plans to be able to cope with those, as opposed to your business continuity is more of that operational response to getting your critical business functions up and running. So look, it is something that will come out during that analysis phase. There's no one size fits all. And again, that's, a mistake we see sometimes. It's a cut and paste off the internet will do. It certainly won't. You've got to look at your business, and that's why that analysis is so important. and then decide what is the best fit for you as an organisation and what you need to recover.
Perfect, thanks, Brett. Another one here, this is probably more focused towards you, Bruce. Do you see what's happening in Wellington coming down to Christchurch too? I'm assuming that's an insurance question.
Indeed, and it's quite an interesting way of looking at it, because I actually believe what's happened is Christchurch has actually gone up to Wellington. So Christchurch obviously had their earthquake sequence 7-8 years ago, and the market tightened incredibly down here, and over time and through education and research, there's a better understanding of the lay of the land and our exposure here in Canterbury, and the insurance market has started to open up again. Wellington are obviously a number of years behind that point. I don't know if it will ever go back to the way it was in Wellington. I think one of the insurers' main fears is with the Wellington event, the epicentre was down here in Culverton, and it had such a significant effect it did in Wellington. So the fear is, what's it actually going to be like when Wellington itself goes off? And I think that's why there's a reluctance from insurers at the moment to really open up and write considerable new business. They will continue managing their existing portfolio. I think it's just something that we just need to work through with time. I know that doesn't necessarily make it easy for some people who are trying to obtain insurance or secure better terms. Unfortunately, it's the market that we're faced with in the Wellington region, and as time goes by, hopefully, touch wood, quakes don't reoccur in the short term, and there'll be more of an appetite to come back into Wellington as time goes on.
Yeah. This is an interesting one. I'm trying to work out who might answer this. Probably Brad in the first place. My CEO is focused on insurance, more so than business continuity and crisis management. How do I convince him otherwise and the importance of it?
Yeah, look, I guess it'd be worth having a conversation with some of the people that went through the Christchurch earthquake and how long they took to get their payout. So I'd always say that business continuity, if you can recover your cells without requiring that assistance from insurance, then you're probably going to be able to get operational a lot quicker. So that it's really about not relying on that third party. It's about trying to be independent as an organisation, and business continuity doesn't have to be hard. It does get overcomplicated by some organisations, and that's why the CEO might be put off. And it doesn't have to be expensive. It just done correctly, you can have a pretty good plan in place that will allow you to operate. For instance, if you lose your premises. So I would always recommend that we should be looking at business continuity as a business as usual activity, and not just a nice to have. So yeah, I guess that would be my response initially.
Yeah, no, fair enough. This one might be for you, Bruce. When presenting evidence of risk awareness and commitment to risk improvement, can the broker quantify how much saving has been afforded or can be afforded?
Look, absolutely, and that's part of our role to work with insurers and negotiate. Look, if the business were to do this and this to improve the risk, what benefit from a premium perspective or terms and conditions can we repeat? So absolutely, there's an indication that can be given, and that's the broker's role to negotiate that with insurers at the outset. It may not be a hard and fast, but it can be certainly a strong indication that this is what it's going to look like if you make these improvements. And it's only fair on any business to understand if they're going to commit to an expense, as an example, in risk management, what benefit is it going to have over on this side. But follow on from that, we shouldn't look at just what direct cost benefit it's going to have from a premium saving perspective potentially. Actually, it could just be as simple as retaining insurance. So there's certainly some risks, EPS is a classic, where strong risk management will actually allow that business to retain their insurance, and or no risk management may actually eventuate in not being able to get insurance. So it doesn't necessarily just have to be a premium saving exercise. It could and should be the actual retention of insurance.
Yeah, absolutely. I couldn't agree more. I think the insurance saving element of risk management and business continuity is the insurance elements are nice if you can get a saving there. I think that's a nice to have, as opposed to actually protecting your business from potentially being economically unviable due to I guess a missed opportunity to manage a risk or respond more effectively than what you would have without a plan.
Absolutely.
Okay, so this one might be, I'm going to put this to Brad and maybe Bruce. What should I bring with me when talking about our resilience and business continuity plans to our broker? How do I get her on our side to understand our mitigation? Brad, I might start with you. What kind of evidence do you think they should be taking along to that conversation to, project what they're doing?
Look, certainly a plan would be a starting point. However, more important, I think, than a plan is possibly a scenario exercise report. So if they've gone through a particular scenario which reflects a current threat to their business and the outcomes from that, it's demonstrated that they've validated the team, they've validated the plan, they've gone through the life cycle. So we generally always recommend having that. At the moment, business continuity is not a compliance requirement in New Zealand, but having that evidence that you've gone through those scenarios is going to really demonstrate that you're taking this seriously. We'd always recommend that that life cycle is happening every 12 months at minimum. So don't take a 7-year-old exercise report to your broker. It's not going to impress them. So you need to be doing this annually. So that would be a real reflection of your commitment to it.
I'd probably add to that, Brad, that taking a 7-year-old exercise report might actually be a bit of a red flag.
Yeah, absolutely.
Bruce, any thoughts from your side?
Just to really reiterate what Brad's saying, sharing that plan with the broker, whilst some of it may not have a direct impact on the business interruption, it's all about understanding how the business expects to respond after an event. And having BCP and business interruption dovetailing together where it can, so it's working in unison with each other. So that understanding of the plan from a broker's point of view, there will be parts of that plan that we can actually demonstrate to an insurer that there is going to be benefit in the event of a major loss, that the BI component will be reduced because the business is taking these other actions out to the side here.
I also say that there's a lot of really, really interesting and critical information in there, like key suppliers, the recovery times that are required for an organisation to help shape your thought process in terms of, getting that BI component absolutely on point.
For sure, and that's all about that understanding of the risk. Where are the business's exposures? Where are they heavily reliant on, or who are they heavily reliant on? Are there other suppliers that they can tap into in the event? It's understanding all of that piece.
Yeah, no, that makes sense. I've got time for one more, and then I'm conscious there are a few more questions on the line, so we'll come back to those directly. Just one final one here. We're in the forestry industry. Big issues happening right now. Insurance cover is limited. So what can we do from a business continuity crisis management point of view to assist us, especially as we have overseas stakeholders who are asking for this, which seems to be very common these days. Brad, I might throw that one to you.
Yeah, we're definitely seeing a lot of third parties are now demanding that organisations have these plans in place. So it really is about understanding their requirements, but also how are you affected by third parties as well as an organisation. So that's where we talked about in that analysis phase, our interdependencies. So when you're going through is who from your side of the things can stop you operating if they have an outage. So that's definitely where I would be looking to ask those questions. As an organisation, you can have a brilliant business continuity plan in place, but if you're let down by a third party, or what they do is affecting your critical business functions, then business continuity is not going to work for you. So you have to close that loop and make sure that you're covered in all those aspects from a third party point of view.
Yeah, absolutely. Probably the one thing I'd add to that, if you do have external stakeholders, casting demands around seeing evidence of your business continuity, and there might not be much in place at the moment, I think it's really important to show a commitment to the journey. We have a lot of boards request evidence of business continuity plans in place when they're coming from zero, and demonstrating that there is a commitment, there is a journey that is being committed to, and there are timeframes and milestones stepped out to get that business continuity program in place will typically buy you some time until you can actually execute on getting that program together.
Yeah, absolutely. And that's something we recommend. If you can, produce a development schedule that says you're going to commit to analysis, planning, validation, then that's the journey started. So that's all you have to do to get this off the ground. And as I said before, that shouldn't be difficult. You should be able to roll out a good business continuity program in 2 to 3 months. It shouldn't take you years and years. So I think that's a key message back to the leadership team, that we can get this done very efficiently. And also we need to get it done today, because things happen tomorrow.
That's all right. Well, I'm going to call it a conclusion there. So thank you very much for your time today. We have recorded today's session, so we will have it available on our website in the coming days if you'd like to relive your favourite moments, or probably more importantly, share it with a colleague. It is worth noting that Brad and I are going across New Zealand. We're going to be in Auckland on the 25th and 26th talking to organisations about business continuity. Wellington the 27th of March, and then back in Christchurch on the 28th. If you did want to book in some time to have a chat through where you are on the journey and how we might be able to assist, more than happy to book some time in. We will be sending out a feedback survey after this, which will also allow you to designate if you wanted to book in some times from that. So you'll be receiving that survey link later today. Feedback is a gift, so please do give it. It'll help us shape the future development of these webinars. Otherwise, gents, thank you very much for your time this morning, and thank you everyone on the line for participating.